Hey everybody, this is Jason Matthews, your financial guru. Today, it's getting towards the fourth quarter. We're starting to be, if you're a small business owner, think about tax planning. How can I reduce my taxes? And one of the basic, most famous way that we think about paying our taxes is by putting money in our retirement accounts. Now, if you're a solo 401k plan where you just are a solo entrepreneur where just you, and you might have people doing 1099 or just you by yourself, this is a video you want to watch. Today, we talk about one of the biggest deductions you could have as a small business owner, retirement accounts. And the two options, if you're a sole proprietor, I don't care if you're S Corp, LLC, sole proprietor, but you're individually by yourself, is setting up a SEP IRA or what we call a solo 401k plan. And today, we're going to discuss the difference, the advantages, and key dates for you to remember. So for instance, for a SEP IRA, we could put up to 20% of our profits into our business. So let's say you made $200,000, after all your deductions, you have about $100,000 worth of profits. We could put away $20,000 into our SEP IRA, now to lower our taxable income to $80,000. The max we can contribute of that is $59,000 a year, and we could do this anytime before filing our taxes. So let's say you're a guy or a woman who don't have your books and your, everything in order. You can do your SEP IRA all the way up until the day that you file your taxes. So if you file your taxes, if you're a sole entrepreneur, sole proprietor on April 15th, you can set up a SEP account on April 15th. If you do a 6-month extension, you could fund it and open up that account all the way up to October 15th of the year. Now, if you're a person who wants to stay on top of it, maximize your taxable income, lower your taxable income and minimize it to the full effect, you want to look at solo 401k plans. And here's the reason why, a lot of things people consider. One thing is, just like a SEP, you can put 20% of your profits. As an employer, so as a SEP, there's two things to look at. They look at your employer contributions and your employee contributions. Now, the maximum as an employer you could put away into the account is $18,500. As an employee, it's $18,500. But you can put 20% of all your business income into this, which is a huge thing. And I'll explain to you guys why in a second. Also, you have a Roth IRA option. So if you don't want the tax deductions today, you can still put the money into a Roth solo 401k plan. The max is $59,000, but the deadline to contribute on the employer side and on your application for it is December 31st. Now, when I talked about this means I have to fill out my paperwork, have it turned in, ready to go by then, but all the funding doesn't have to happen now. We'll do it all the way up into our tax funding. So here's a way how I look at it as a reason why if you're ahead of the game, you do a solo 401k plan. I do a SEP if my clients don't do this before the end of the year. Let's say your profit of your business is $100,000 at the end of the year. You're still, as a sole proprietor, going to have to pay 15% in self-employment tax, which now you have 15% of that. It's $15,000 that you're paying in self-employment tax, all because you are now in, even though you have a SEP, they look at the $100,000 before the SEP contributions, and you're going to have to pay 15% self-employment tax. You can't avoid it. But with a S Corp, right, or with your business, let's say you contribute, you had $100,000 profit. You put $15,000 into this as your employer account. Now your taxable income is $85,000. If you look at 15% of the $85,000, we're paying now only $10,000 in taxes. This is a savings of $5,000, all because we took the time early to contribute towards a solo 401k plan compared to a SEP account. Now, if you have any other questions, you want to go dive a little bit deeper into this, please allow me to know. Please give us a call at 510-229-7608. Make sure you put that thumbs up. Let us know that you guys like us, and please subscribe towards us. Once again, this is Jason Matthews, your financial guru.